Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market and analysis. So let's get started. So my dear friends, I am uploading video after a few days. I was not well, I was having fever and market was also silent. So as a result, I did not upload any videos, but yesterday we got to see some good moves on gold. So here I am with the chart of gold again. Proceed, I would like to mention that my dear friends, this is Telegram, and you can see that there are many groups and profiles in my name. All these are scams. I do not have any profile on Telegram, so there are lots of scams going on. So please stay away from all these scammers. In fact, recently I also saw that there are some scam profiles in my name in Instagram also. So my dear friends, if you really want to contact me, then the only source of contact is through my website. The link will be in the description, and I'll also paste the Instagram link if you want to follow me. Okay, I'm not very much active, but still. Okay. So now let's talk about the chart of gold. So gold edges higher, improved liquidity could support. Gold edges higher in Asian trade amid improved sentiment with the US set to enter a rate cut cycle in 2024. Liquidity is expected to improve significantly in global financial market and benefiting the yellow metal. Usually we don't get to see much volatility liquidity in this particular time of the market, but this was surprising. Right after Christmas, gold was volatile, gold was going up, and you can see that dollar index is also going down. In our previous videos, we discussed about the possibility of DXY going towards 100 level. But to be honest, I was expecting that in the coming year, new year, we will get to see go DXY below or around 100. I was not expecting that before 31st. Okay, we will see the DXY will be going down. And as we all know it very well, that for a trend reversal, we need a fundamental factor. And right now, there is no news also that will bring a trend reversal. The next NFP may bring some relief to DXY, but till then, you can expect that DXY or US dollar index will be under pressure. If I take you to the daily chart, you can see the next support is around 99.68. Having a support doesn't mean that we will get to see a trend reversal. If the market sentiment remains same, then maybe we will get to see a temporary bounce around 1999, and then DXY will be going down again. So let's wait and watch. The coming NFP will be important for the US dollar index. And now let's talk about the chart of gold. So gold is standing at 2087. This was surprising. And if we look at the trend of the market here, then obviously there is no doubt that this market is bullish. So if you're holding a sell position, then obviously you have taken a big risk, I'll say. Because the market sentiment is bullish, the fundamentals are pushing towards gold towards the upside, and obviously in the coming days also we can expect that gold will be going up. If the liquidity fades, let's assume by tomorrow or by 2nd or 3rd Jan, if there is not much volatility also, still it will be better for us to be on the buy side. After all, market sentiment is above all. So market sentiment is pushing gold towards the upside, and if you already have a buy position, then obviously you need to be on the buy side. On the further upside is very much possible. Next target you can consider to be around 2100 being the psychological resistance. But in this type of market situation, resistances do not matter. After all, the around resistances, maybe you will get to see some one or two small red candles, and after that market will break the resistance and move higher. Support and resistance doesn't mean trend reversal. Support and resistance are not permanent, and market sentiment, if pushes gold towards the upside, then obviously it will be heading towards the 2150 around this level. Okay, but uh at first gold needs to hit 2100. Okay, so do not consider any resistance right now, because in this type of market condition resistances do not matter much. So as I said, if you already have a buy position, be on the trade, no need to do anything. And if you're looking for a fresh position, then obviously you need to wait for the market to retrace. As we all know that in this type of market condition, buy at dip or buy at support is the best trading strategy. Not only you get the best risk to reward ratio, okay, you also follow the trend of the market here. So in this case, your first level will be around 2079. Okay, around 2079 you have the first level, then you have around 2074. So here also the volatility of the market will be important here. If the market is not very volatile, if you see the market is coming down with small red candles, you can expect 2079 to be the first level. On the other hand, if you see that during the European session or US session, market is coming for retracement with big red candles, in that case 2074 or 2070 are the important levels for you. So I'm giving you three levels. So out of these three, 2074, 2070 are, you can say, are the reliable ones. 2079, okay, will work if the volatility of the market will be low. And let me show you why we are considering this. We are considering FIBO from here. You can see we have FIBO 50%, sorry, 23.6% retracement level around 2079. Around 2074, we have FIBO 38.2% retracement level. Around 2070, we have FIBO 50% retracement level. And the reason, okay, I said 2070 is the best level because you can see not only we have FIBO 50% retracement level, but the previous resistance will also be working as support. And you can see the 50 moving average has been acting as dynamic support, and we also have the 50 moving average. So if we combine all the factors, then 2070, yes, it's the best level. But sometimes market doesn't come for deeper retracement. In that case, 2074, 2079 are the levels where you can look for a buy position. You can look for a buy at breakout also, but honestly, I will not go for buy at breakout because 31st is round the corner and volatility may subside, and without volume, volatility, breakouts may fail. So if you go for a buy at breakout, or if you go for a buy above 2089, then please be careful because the breakout may fail. But if you have a risk taking capacity, and if you think that you are a daredevil kind of a trader, then yes, you can go for buy at breakout. But risk management will be very, very important. Initially go with a small lot size, but if you see that market is continuing the upside with volume, then you can enter completely. But at first, go with a small lot size. That will be much better. So that's all from my side, my dear friends. Again, I'm repeating, if you already have a buy, be on the trade because market sentiment is bullish. So as a result, you should respect the market sentiment and try to follow the trend of the market. And if you're looking for fresh entry, buy at dip or buy at support will be the best trading strategy that you will be following. And be careful because after Christmas and till the first week of Jan, okay, this is not an ideal period to trade because of low volatility and unexpected moves. So risk management should be your priority at any point. And 2070 seems to be the best level, but if market doesn't come for deeper retracement, then 2079, 2074 all are also there that we can consider. Buy at breakout is very risky, but let's wait and watch what happens. So that's all from my side, my dear friends, and please stay away from all the scammers that I mentioned. And if you really want to follow me, then the link will be in the description. Thank you so much. Bye bye. Take care. Have a lovely time.